Hello, traders and investors, and welcome to Trade with Raymond. As we get to the final stages of our Ichimoku Master Series, today I shall be talking about tips and tricks in trading Ichimoku. I shall be doing a top-down approach of current market and help you to identify where the market is heading towards and whether you should make a buy position or a sell position. I want you to watch this video carefully. Record it, watch it as many times as possible because I'm going to reveal some nuggets that will help you to become a successful trader. And I want you to like this video, share, ask questions, send us an email. Last time I got a wonderful email from another African country, and the video really helped them to target properly, to remove unrealistic expectations out of their trades. So guys, let's head to the chat. See you there.
So let me show you some quick Ichimoku trick here in this Ichimoku Master Series. Starting with the Euro yen, I'm going to be covering the Euro today. And just two pairs. So on the weekly time frame, you have this happening. The market has technically been bullish. Strong bullish trend. There was some news early on, and that changed the market dynamics for just a short while, but the market got back into gear. So we have a bullish trend here where the market is going up on the monthly time frame, on the weekly time frame. The market took a long time here because this new high that was being experienced there was a lot of back and forth there. Buyers were deciding, sellers were deciding. It looks like now the buyers are winning from what I see, the price action I see here. From the technical perspective also, we have a good cloud going up. Tenkin is beautifully going up, so we have a bullish behavior here. Soon the Kijun will follow up. However, our trigger time frame is the hourly time frame, and this is the trick. So the market opened. Let me get the information here. The market opened over here. This was a setup to buy. Okay, market has done somewhere 83 pips. So you got into this setup. Trading stop is activated after 60 pips. Market did not do 60 pips. You have this huge candle coming this afternoon. This is when some people started panicking, and I started receiving messages. So this behavior is just one candle behavior. You don't have to worry because the overall trend is still bullish. The future cloud is bullish. The CCI is bullish. And this candle here is very significant. Hence, what we had here, if it had closed from the top to the down as a full candle, that may change something. But based on what I saw here, there was no problem. However, let's say you are now coming into the market and you want to take a position. So you came in not from this area, but somewhere here. Yes, you still have an opportunity. So somebody's going to say, okay, I entered a position and this big candle comes in, so I want to exit. No, sometimes you have to move to the shorter time frame to see what is really happening there. So if you shift to the hourly time frame, you realize that that candle behavior is exhibited in 1, 2, 3, 4 candles because it's a 4-hour time frame. And after that exhibition, the market decided to recover. So this is a recovery candle. If I put a line on the close of that candle, okay, the recovery candle, and I view it on the 4-hour, this is what we are going to see. So you still have an advantage that this behavior shouldn't worry you, and that the opportunity to go up is still there. So if you have entered in this position, you shouldn't be worried. You can just go back to the lower time frame and see the behavior of this strong pullback and see how the market is recovering. Then you make a trading decision. Okay, so this is a very wonderful recovery card to give you an opportunity to get back into the market and make a trade. Then let's look at similar behavior in the pound yen. Wonderful trade here. So pound yen, this is what you have. You had the market in the bullish direction already for many weeks. Then on the 4 hour time frame, you went up and you came down. So an opportunity to re-enter the market because the pullback was significant. For those who traded Fibonacci, if you pull a fib from the low to the high, you realize that you almost had a 50% fib retracement, which is a very good one. A 50% fib retracement. So the opportunity to re-enter the market is a good one. And this candle was 69 pip. CCI was 69 on this candle. It's a very strong candle because you have had 1, 2, 3, 4 candles not being significant, and you have this very good significant candle. So when you enter the position, you saw this, but you see, watch this. The trick is here. CCI, if you watch the reading here, when I move the candle, can I watch the readings here? CCI was 67.9, let's say 68. Then on the next candle, CCI went up, even though the market came down. The close and the low, CCI went up. This is giving information that the market is still in a bullish momentum, because look at this cloud, it's still bullish. So when you enter, you have to enter at an advantageous position. You don't enter on the close of this huge candle, because this is what you will be experiencing. If you enter on the close of this huge candle, you have your stop loss all the way almost 240 pips or 235 pips down here. That is way too big. So what will you do, or what will I do as a trader? Seeing this big candle, I will go to the hourly chart and look at the behavior of the recovery candle. So this is the behavior. So we have 1, 2, 3, 4, 5, and then boom, down. So the recovery candle is the next candle. This wonderful huge candle. I'll put a line on the close here for you. On this close is my entry. So when you view it on the 4 hour time frame, this is the entry. So this reduces your stop loss size from 235 to just 170. And then the market has already made went up 75 pips. So I said when you have 60 pips, you can move to your stop to trading. So over here, you should have already moved to trading, holding in just about, the spread is 1 pip, blocking 2 pips, and see the market go further. Should the market reverse, you will not lose any money. And this is some of the tricks in Ichimoku that you will not find in any textbook. Guys, keep watching, keep sharing. I'm sure the next video will be the last one, and we'll call this Ichimoku Master Series. We'll bring it to a close. But you can contact me. We still have training services going deeper and deeper. So thank you for watching. Thank you for subscribing. Thank you for